I'm Yahoo Finance Executive Editor Brian Sazian here, taking a look at a live shot of the opening bells on Wall Street on this Friday morning. Vantage Corp ringing the bell at the New York Stock Exchange. Avid Bank Holdings getting things popping over at the NASDAQ. Now I'm keeping a close eye on Intel after its CEO fired back at President Trump in a blog post. This after the president demanded he resign due to alleged ties to China. Now, opening bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money in your portfolio. And we will live up to this promise today, bringing you two big power player interviews. We're also watching the major averages, of course, into the weekend. The Dow, S&P 500, NASDAQ all opening. We're still looking or trying to get that opening, but futures were in the green all morning long. So lots going on in the markets after a very busy week. And there are the markets right now coming out pretty solid ahead of the summer weekend. All right, that first interview starts right now, folks. Groq continues to shake things up in the AI chip market as it sets its sight on challenging the likes of large incumbents like NVIDIA and AMD. I want to bring in Jonathan Ross, Groq founder and CEO. Jonathan, always nice to see you. Thanks for hopping on this Friday morning. Lots of focus this week on everything that OpenAI released, a new model for them. Took about 2 years to develop. Now, you work closely with OpenAI. What's your take on that model, and how is Groq leveraging it?
Well, thank you. Yeah, so OpenAI just released an open source model this week, and then they surprised everyone by also releasing a brand new frontier model. So we were a launch partner for their open source model, and one of the things that they were very excited about is the speed at which we could run that model, much faster than is possible on a GPU.
I think some of the early thinking off of this model, Jonathan, is that there was a letdown component. Perhaps we're slowing down in terms of development, how fast these models could push things. What was your assessment of it?
Well, so the vibe checks when you actually use it have been pretty good. One of the things that often happens is benchmarks fall behind, and it makes it really difficult to keep up. Think of it as a really prodigious student. When they're taking a test, sometimes they will do better than the test can show. I think it'll take a little bit of time for the industry to understand exactly where the model's settling out, but most of the people that I know who are really deep into this are pretty excited about the model.
I imagine one of the biggest takeaways from this model, Jonathan, is that the hallucinations or the mistakes are starting to get fewer and fewer.
Yeah, and one of the things, I often don't like to call it hallucinations. I like to call it a mistake, right? Because models make mistakes. And one of the questions that we often get asked is, how can you use these models if they make mistakes? Well, human beings make mistakes. The question is, are you making too many mistakes to be useful? So one of the things with this model is by making fewer mistakes, it's now going to be useful in more applications. So it may not be yet ready for healthcare, and making diagnoses, but it's getting closer and closer to that point. And each time a new model is released that makes fewer and fewer mistakes, you're going to be able to use it for more and more critical tasks.
And of course, Jonathan, we see these models that development continues to move at a rapid pace. What does that mean for your business?
So for us, more open source models give us more options. So right now, Groq is actually the most popular API for running models that are open source or open weights. I believe about 33% or so of developers who develop AI applications now use us, which makes us, I think, one of the most popular. And we mostly use open source models. So just like everyone else, we run the same models. The difference is when you get access to these models, the differentiation becomes the speed at which you can run them, the cost at which you can run them. And what we offer is price performance. Now, one of the things that we're really excited about is this new US AI stack that's being developed. We've actually deployed our chips around the world. We refer to it both as the home game and the away game. The home game is making sure that you actually have enough compute at home to satisfy your needs. The away game is making sure that people around the world are actually using US compute. So we've deployed in Saudi Arabia, we've deployed in Europe, and we're going to be deploying in a lot of other places around the world. And we're really excited because our chips are currently made in the United States. And what we would like to do is also have these US leading edge models deployed on that hardware.
Jonathan, how difficult is it to make chips in the United States? We're all watching the high drama unfolding at Intel, but again, this is a country that you and I both live in, still very reliant on chips coming from a Taiwan semiconductor.
It's incredibly difficult to build chips in the United States. We're just now building the ecosystem. Even when chips are manufactured in the United States, it's really hard to package them in North America. And one of the reasons is all the other AI chips use a component called HBM, or high bandwidth memory. And that tends to get packaged in TSMC. So even if you are fabbing your chip in the US, it still gets sent to Taiwan in order to get packaged, and then it gets sent out. In our case, we're unique in that we're able to do this fully in the United States or in North America.
What's the risk to the development of AI models and the AI thesis more broadly, Jonathan, as a result of any of these semiconductor tariffs that may get put into place?
Well, I think if you read the most recent tweet very carefully, it's really intended to entice people to get on a trajectory to build in the US, and we strongly welcome this. So while we've been doing this since we were founded in 2016, it's been very difficult, and we did it before it was popular. These incentives or pushes to actually manufacture in the US are just going to make it easier for us to continue doing what we've been doing. And if you read the tweet carefully, if you have a plan or if you are working towards building in the US, you will be able to avoid those tariffs. And we're all in favor of that.
Jonathan, so many executives in the industry, the chip industry, have told me that we need Intel. We need Intel. The US has to have Intel. But I just see what's going on over there. I've talked to you before. I see the work that you're working on. I see what NVIDIA's doing, AMD. I mean, does the U.S. really need a strong Intel when we have companies like yours and NVIDIA and AMD continuing to do quite well and push the groundwork forward for all things AI?
So if I was coming from a selfish point of view, I would say, no, we don't need them. The reality is they're producing chips that sometimes compete with us. But from a U.S. standpoint, the more semiconductor companies that we have that are able to push the bleeding edge in the technology, the better off the U.S. is, and I'd rather focus on that. I do think it's important that Intel be in a strong position. It is one of the strongest foundries. We work with global foundries currently. But if Intel were stronger, that would be good for the US. I think the question for everyone is, how do we get Intel in a place where it's strong again? You don't get to do it just by handing money out. You have to fix some of the systemic issues. And in my experience, Intel has an amazing long culture. They blazed a lot of the culture in Silicon Valley.
But bureaucratic, Jonathan. I think that's been one of the problems in hindering their growth.
Well, and I think this has been identified, so I'm not going to be breaking news to anyone at Intel, but for the rest of the world, Intel got to a point where it became a little bit smug and thought that everything it was doing was great, even when it wasn't. Intel now understands that reality, and that was the first step in them moving forward. I do think Intel has a chance to turn it around, and the question is, will they?
Jonathan, since the last time I talked to you, a report earlier in July from the Information saying that you might, or you would like to raise between $300 and $500 million to help fuel your growth. That would value the company at about $6 billion. Anything you can share on that front?
Well, Brian, one of the best things about being a private company is
I knew that was coming, Jonathan. I know where you're going, man.
Yeah.
I mean, but do you need that capital? Like, is the demand so strong right now that it's time to pull the trigger?
So at this point, we are supply limited, not demand limited. So we've launched a couple of models that are quite popular, and individual customers are interested in that capacity. We had planned to deploy 70,000 chips in one particular deployment, and it now looks like one single customer is going to be using that. And we didn't expect that level of demand. One of the things that is unique in this market, and I want to differentiate generative AI from SaaS because they're totally different. So in SaaS, you write an application, and that is the quality of the application based on what you wrote. In generative AI, what you can do is you can turn up a knob, you can actually produce more tokens and increase the quality of the output. And so you actually can spend money to make your product better, but only if you have the capacity to turn that money into tokens. And so that's one of the drivers that you're seeing. We've never had a situation before where you could literally just turn a knob and make your application better. You had to have developers do it.
Lastly, Jonathan, you're working very closely with folks in Saudi Arabia to help scale up their AI infrastructure. How large an opportunity is Saudi Arabia, just not for your company, but for the wider tech industry?
massive. So Saudi Arabia has been going big on this. So we've been working with Humane. And so Humane is going quite large. They've been an amazing partner to us. So the 19,000 chips that we deployed in Saudi Arabia last year, 51 days from signing, we had it up and operational, and that was largely thanks to the speed at which they were able to move and remove hurdles. We can't even build that fast in other places in the world that are used to moving quickly. It's amazing.
All right, we're going to leave it there. Always great to chat with you. Learn a ton as always. Groq founder and CEO Jonathan Ross. Have a good weekend. We'll talk to you soon. All right, straight ahead, I'll check back in on Firefly after the aerospace upstart saw a skyrocketing IPO day on Thursday, and we'll have our second power player interview of the day. Chime's CFO, Matt Newcomb, the fintech, posted its first earnings report since going public back in June. We'll chat with Matt about what's next. Welcome back to Opening Bid. Firefly Aerospace is coming back down to earth after a big IPO debut on Thursday. The stock finished its first trading session up 34%, giving the SpaceX rival a market cap of about $9 billion. Here's what Firefly CEO Jason Kim told me about the post-IPO path forward.
We've got orbital flight heritage on our Alpha rocket. It's done a 24-hour launch for the Space Force. That's set a gold standard. That's going to be really important for Golden Dome. And then we're working on a 16-ton reusable rocket that's going to be launching commercial satellite constellations, national security space launch constellations, missions to the moon. And also we have a Blue Ghost lunar lander. It's going to do annual missions, and then we're going to ramp up those missions even more because you heard Secretary Duffy talk about putting nuclear power plants on the moon. Well, we're the first and only commercial company to successfully land on the moon. So we'd like to build up the infrastructure on the moon, make the moon more frictionless for everybody else to use it, because everything's going to go to the moon and through the moon in the future.
I know you have no idea what a Golden Dome is, so Yahoo search it. You're welcome in advance. All right, we have another Power Player segment for you today. Matt Newcomb, Chime CFO, is here. Chime is out with better than expected earnings. This was the company's first earnings report since the successful IPO in mid-June. Matt, good to see you here on this Friday morning. Let's talk some of these results. I think a lot of the research from the street that I saw this morning focused on your efforts on Mypay. What is that, and how did it perform in the quarter?
Thanks for having me on the show, Brian. It's great to be here, and we're really excited about our first quarter out of the gate here, where we showed both accelerating revenue growth and continued strong operating leverage on the bottom line. So as a reminder, Chime is a financial technology company. We serve everyday Americans, those making up to $100K per year. We provide them core banking and payment services. And we developed a business model that is, we believe, authentically aligned with their success. And I think that's continuing to really resonate with our members. Again, in Q2, we saw revenue growth of 37% year over year. Meanwhile, we're showing the power of the operating leverage in our model. We grew our bottom line adjusted EBITDA margin by over 18 points over the last 2 years. And we think we're just still early days in serving, again, the nearly 200 million everyday people making up to 100K in this country. As it relates to Mypay is one of our newest hit products, and it continues to resonate really well with our members. Mypay allows our members to get access to their earned wages on demand for free, or for a small fee if you're prepared to, if you want it instantly. And we believe we're leading the market with this new product, and it's resonating a lot.
You mentioned, Matt, that you focus on households earning $100,000 a year. When they're using Mypay, what are the default rates or the non-payback rates that you're seeing on a product like that?
I think one of the really unique things about Chime's business model is that we serve everyday people in a primary account or a direct deposit relationship. And what that does for our business, it gives us a lot of advantages to be able to offer things like Mypay at what are, we believe, the lowest cost in the market. And that's because with a direct deposit relationship, we are positioned at the top of the repayment stack. We have an advantaged repayment position. We have advantaged data on our members. And again, that allows us to offer our products that lead the market in terms of cost and quality.
Hang with me, Matt, here, because over the past 4 weeks, we've gotten a lot of poor reads on the state of the U.S. consumer. Chipotle, not a great quarter. Starbucks, not a great quarter. Wendy's out this morning, sales down. They're all sending, I think, powerful signals on the health of the consumer or lack thereof. What are you seeing with your consumers? Does it work if consumers are more stressed, you'll see a pickup in activity on Chime because they need their money quicker?
Great question. Because we serve everyday people in a primary account capacity, many millions of people, we have a pretty unique and real-time view into the state of the everyday consumer. And I think despite some of the headlines perhaps that are coming around the last few weeks, what we see are very steady trends. I think one of the important things to understand is that, again, because we serve members in everyday primary account capacity, they use us for their everyday expenses, gas, groceries, bills. And so think about our portfolio as heavily concentrated in non-discretionary spend categories. That being said, we're seeing steady trends across really all categories of consumer spend, both discretionary and non-discretionary. We're actually seeing that restaurant spend is up year over year. We're seeing other categories of spend like rideshare and apparel also up year over year. And so when it comes to the state of the everyday American, we're seeing steadiness, stable trends for sure.
Have you seen prices for these things that your consumers are using? Have prices gone up in large part because of tariffs?
Inflation has certainly been part of the macro story now for a number of years. And we, at the end of the day, are a nominal payments business. And so we are impacted from things like inflation. As it relates to our members, wage growth and inflation are part of their everyday lives. From a trend line perspective, what we've seen is inflation has actually come down over the last few years. We haven't seen massive changes in pricing or inflation rates of late. We're still seeing very healthy consumer spend trends again. And again, the overall state of the consumer, we believe, is healthy.
Man, I'm trying to figure out why the stock has come back relative to the IPO. I mean, you're out here, double-digit sales growth, adjusted operating profitable, all good things, telling a good story on that earnings call last night. When you have talked to investors post-IPO, what have they told you?
Yeah, we've had great conversations with investors, and I think they're recognizing the strong model that we've developed and our progress. I think as it relates to stock price, not uncommon for new companies to see some volatility out of the gate. That's less of what we're focused on. What we're focused on is the long-term opportunity, again, to serve nearly 200 million Americans, making up to 100K in a primary account capacity. And we've got a really bold vision there to be the largest provider of primary accounts in the US. And we think we're really just scratching the surface on that.
I think a lot of folks, Matt, slept on the innovation at the likes of a Coinbase and a Robinhood post-IPO. I mean, both those companies have changed so much of what they're doing, launched a ton of new products. Are investors sleeping on what's next for Chime? I'm trying to get a sense on what's your next big product or two after you further develop Mypay?
We think we're really scratching the surface of serving our members across a range of their financial needs, whether that's core banking and payments, borrowing, investing, saving for the future, insuring. We feel like as their members' primary financial account, we've got a role to play across all of those areas. And so we have no shortage of things to do over the next decade or two. And we're just getting started.
Any plans for bank branches? And before you start laughing on live TV, Matt, I will say you've started to see a lot of the traditional old school banks go back to opening up bank branches. Not sure why. What say you?
We've had a lot of success serving our members on their phones. And now with the addition of generative AI, I think that's even transforming what we can offer to our members efficiently while also improving member service for our members. So, we don't have immediate plans for a bank branch. Our asset light model, digital model, I think serves us really well. And I think many more millions of people are learning they can really have all of their financial needs served by Chime.
If I need help with something on my account, Matt, am I going to get a human? And then if not, how is AI playing a role internally at a Chime?
Yeah. AI is really beginning to impact our business in a substantial way. I think we are truly at the cusp of a really radical transformation in the industry. And just to get a little philosophical for a second, if you rewind and think about the Industrial Revolution, it really was not the companies producing energy as much as it was the companies harnessing energy to transform the way that they delivered products to their customers that succeeded. And I think there's a great parallel there for where we are today with AI. The companies that are going to embrace AI to change the way that they deliver services to members are the ones that are going to succeed. And I think Chime is really at the forefront of that. We're embracing AI across the company. Chimers are using it every day, every week. And we're really starting to see some serious business results on this. For example, we now have AI-powered tools automating over 70% of customer support interactions. And I think what's most important is not just the efficiency, but it's also delivering better consumer experiences for our members. In May, we launched a generative AI-powered voice bot, and that actually doubled member satisfaction scores. And so we think we really are early innings in AI transforming what we can do for our members.
Strange market reaction here. You see the stock down double digits. Matt's sitting here on Yahoo Finance telling you revenue is up, 37%. Parts of the business doing well. Their operating profits, they actually had them. The business looks to be doing well. Don't quite get that market response. But look forward to continuing following your story. Matt Newcomb, Chime CFO. We'll talk to you soon.
Thanks.
All right, we're going to continue the conversation around big IPOs and how to trade them with the Director of Investment Strategist at Renaissance Capital, Avery Marquez, as part of our Investor Playbook at 11 a.m. Eastern. You do not want to miss it. All right, the trading day is underway, and in financial markets, every second matters. What you do right now could determine your financial future, so I'll leave you with this forward-looking thought into the weekend. If you aren't reading the prospectuses on the most important IPOs, ask yourself, why not? You could be missing out on huge money-making opportunities. All right, tune into Opening Bid Unfiltered on Monday for my interview with Jason Stein, SC Holdings Managing Partner. Jason is behind a host of big investments such as Athletic Greens, Hyperice, and LeBron James's entertainment company. Very interesting business model over there. Coming up, Julie Hyman has you for Market Catalyst. I'll join her at the top to dive into President Trump's new choice to be a Fed governor. We'll be right back.